Welcome back to the Wealth Hub IQ. Today we're talking about MBS, Mortgage Backed Securities. I wanted to do this video specifically because I hear a lot of the big investment banks making money off of MBSs and off of mortgage backed securities. So today we're going to talk about it in more detail. This is almost the second part of the mortgage video I did earlier. So what is an MBS? A mortgage-backed security, MBS, is a type of investment that is backed by a pool of mortgages. Essentially, it allows investors to buy a share of the income from a group of home loans. So think about it. As homeowners make their monthly mortgage payments, the income is distributed to MBS holders, providing them with a return on their investment. These securities are often bought and sold on the secondary market, providing liquidity for investors and enabling financial institutions to generate funds for additional lending. Now, when I read that the first time, I was confused. So if you're confused after that, don't worry, I'm going to break that down into more detail. Imagine you and your friends each have a piggy bank where you save money, right? Now, let's say your parents decide to put your piggy banks together into one big jar. Whenever you and your friends add money to your piggy bank, some of that money goes into the big jar. Then if someone else wants to get some money from this big jar now, they can pay a little bit to get a share of it. So they get some of the money when you and your friends save more. The more you and your friends save, the more money they get. This big jar is kind of like a mortgage-backed security, MBS, where people put their money together and others can buy a piece of it to earn money from everyone's savings. A mortgage-backed security is like a big bundle of home loans. Think about it like this, a big bundle of home loans. Banks make these bundles by combining many individual home loans and selling shares of the bundle to investors. When homeowners make their monthly mortgage payments, the investors get a part of those payments. This way, investors earn money from the interest paid on the loan. So if you're not aware, some of the biggest banks that you know, either high street banks or investment banks or hedge funds, they actually profit from us making our mortgage repayments on a monthly basis or a bi-weekly basis. So it's always been a thought of mine, how do they actually make money from MBSs, from mortgage-backed securities? Well, there's three main ways that investment banks make money from MBSs. The first is origination fees. Banks charge fees when they create and approve mortgages. The second is selling mortgage-backed securities. Banks bundle these mortgages into MBS packages, MBSs, mortgage-backed securities, and sell them to investors. They often sell these bundles for more than the total of the individual loans, making a profit. And also by servicing fee. Even after selling MBSs, banks might keep the responsibility of collecting mortgage payments and managing the loans. They charge a fee for this service. Now again, if you weren't aware, individual investors on the stock market can also profit from MBS, mortgage-backed securities. So today let's talk about how exactly they do that. The first is through interest payments. Individual investors can earn money from the interest that homeowners pay on their mortgages. Each month, a portion of the mortgage payments, both principal and interest, is distributed to investors. Another form of payment could also be from principal repayment. As homeowners pay down their mortgage principal, those payments also go to the investors, slowly giving them back their original investment. And the main question, do homeowners make money from MBSs, mortgage-backed securities? Well, the short answer is no, but let's go into a bit more detail here. Homeowners do not directly make money from MBSs. Homeowners are the ones making the mortgage repayments that fund the MBSs, the mortgage-backed securities. They don't actually make money from MBSs themselves. And we can talk about an indirect benefit. Some people might even call this a backhanded slap, but homeowners actually benefit from the availability of mortgages. So when banks sell MBSs, they free up money to issue more home loans, making it easier for people to buy more homes. Additionally, because banks can sell these loans, they might offer lower interest rates or better terms than they otherwise could. Now, the reason why I said this could be seen as a backhanded insult almost is because the mortgage repayments that you're making profit from, the bank are only willing to provide more because more investment banks will be able to make profit from them. So ultimately, they're only selling it because they can make profit from selling it, and that's why there's more available as a result. So let's wrap it all up. In summary, banks make money through origination fees, selling MBSs, and servicing fees. Individual investors make money from the interest and principal payments of the bundled mortgages. Homeowners don't make money from MBSs, but they benefit from the availability and potentially better terms of home loans. Thanks for watching. Like, comment, and subscribe to the Wealth Hub IQ for more financial wisdom.